just to give you a little bit of background on why we're doing this, obviously the economic impact of the coronavirus outbreak has already been felt by small businesses and entrepreneurs across the UK, with warnings over just how bad the economic impact could be, and following a raft of measures announced by the government over the past 7 days that are designed to protect businesses, protect workers, and protect the economy. It just seemed a really logical and natural place to start our first webinar and start the series, and focus on that all around finance. So our speaker today is Lucy Cohen, who's the co-founder of Mazuma, which is the UK's first subscription-based accountancy service. Having launched Mazuma at the age of 23 in 2006, Lucy has established herself as a leading figure in the UK's financial space, particularly among smaller businesses. So Lucy's going to deliver her speech, deliver her talk, go over everything, and then we'll have some time for questions at the end. If you do have any questions for Lucy, leave them in the Q&A function at the bottom of your screen, and we'll do our best to get through them later. So that's all from me. I won't step on Lucy's toes at all in terms of any of the content, so I will pass over to you, Lucy.
Okay, hello everyone. Thanks for coming along and listening to me. As promised on Twitter, I have brushed my hair, and believe it or not, these are not pajamas, it's actually loungewear, which I think we can all agree is 100% acceptable attire for the office nowadays. So when I got asked to do this talk, I've been really engaged with a lot of stuff on social media and lobbying government to get more support for business over the last few days. And in doing what I do, our business deals exclusively with small and micro businesses. So I'm really seeing firsthand the impact that people this is all having on people. It's I think the most startling thing for me has been the sense of panic that has arisen, and how quickly things can spin around and really cause disruption. I think that we're so engaged nowadays with social media and that kind of constant 24-hour news cycle that escaping it in any way possible. Back in 2008, when the financial crisis hit, I was 2 years into the business. I was still very young, so maybe my risk kind of factor wasn't there. But it didn't feel like this. I know this has other implications to it as well, so it's not the same thing. And I think the primary thing we have to think about here is that the most important thing is that we and our loved ones and society as a whole stays healthy, and that we look after our health, because that is the number one thing. So it feels different in that sense. There's a kind of double-edged panic to this. But I think what I've really seen is how quickly people realise how little runway they have. If your sales dry up for a week, what does that leave you with? How long can you last? How long can you pay your staff? Well, these are all questions that in that first wave of news weren't answered. You know, the budget was announced on the 11th of March, and I was live blogging that and saying, oh, this is quite good. You know, we've got support for business. They've recognised this. And then a week later, the entire landscape had shifted again, and there was more things to deal with. And now we're in a space where we still don't have support for self-employed and freelance people, the support that exists currently for directors of limited companies or sole director limited companies. It's really sketchy. We don't know. Normally directors are excluded from a lot of employment legislation. We actually don't know whether they're going to be included this time, because can you be furloughed as a director if you're still banking and making payments and doing research? Are you really a furloughed worker, even though your limited company might not bring in any cash? So these are all questions that we, I'm involved in several kind of lobbying groups to lobby the government to answer these questions and to get answers for people. In the meantime, what you can do, and I think it's really important not to focus on what you don't know, but to focus on what you do know in these times. And that's to focus on what you actually can do as a small business or as a business regarding your finances. And it's going to be completely different for everybody. We're a subscription-based business, so we have thousands of very small subscriptions. We are going to see a percentage drop off. We've already seen it. People panic and people cancel their subscriptions, and I understand that. And then you might be a business that works on one big project per month, in which case if that project's cancelled, you've got no income for the month. So this advice is it's quite generic. It's not going to be specific. You can ask me questions at the end, and hopefully I can maybe answer some specifics there. But I think the most important thing through this is to remain financially engaged. I'm going to keep referring to my phone because I was writing some notes earlier. What is being financially engaged? My definition of that is really taking this opportunity to hunker down and really get to grips with your finances. As someone who runs an accountancy business, we know that a lot of people kind of approach tax, cash flow, bank accounts, that kind of thing, with a kind of thing of, oh, take it away, deal with it, I don't want to know about it, just sort out the legislation, sort out the compliance. And that's fine. However, at the moment, you may have a little bit more time on your hands, you may have less time on your hands. But now is really the time to become really engaged in what your finances mean. The first port of call in doing that is be obsessive about your bank account. You should be in your business bank account and in your personal bank account every day, checking it twice a day maybe. Firstly, check that things are going as they should do. People who are supposed to have paid you, haven't cancelled or panic cancelled and not told you about it, and that things that you are paying for are as they should be. Mistakes happen. Some people might have accidentally double drawn a direct debit. That could screw up your finances later this month. So being really financially engaged, and that's getting a real sense for what your cash flow looks like. At this moment in time, cash is king. It's a cheesy, cliched saying, but right now that's it. Don't be overly concerned with that profit and loss account right now, because right now we're in survival mode. Businesses that have gone through funding rounds and startups and stuff know that cash is the big thing. You can be making a profit and have no cash. You can be making a loss and have a lot of cash. So I think that's the real thing to focus on there, is the cash, and to make sure you know exactly what is going in and out of your bank account. Then secondary to that is knowing what your accounts look like. So we've had lots of calls from clients, panic calls about clients who were, the years that are just about to end. Sole traders and a lot of limited companies, their year end is end of March, April. And up until this point, 2 weeks ago, they were still trading and they've got a profit in there. And they're concerned about how they're going to pay that tax bill when it comes. The government already had a scheme in place called Time to Pay, but they're being a little bit more generous with it. If you find yourself in that position, the thing you need to do is be proactive. So keep an eye on it, keep an eye on your cash, and if you get to the point when you have to pay your tax bill and you don't have that cash available to it, first thing you do is you call HMRC. There's a special number for COVID-19 related tax inquiries. Talk to HMRC and say, I can't pay my tax bill, can you spread it out for me? And they will say yes. They will say yes, that's absolutely fine, and they will work with you to put together a payment plan for you. That's number one. Okay, so the next thing is really from a kind of, suppose, a social aspect in terms of being financially engaged. This is happening to everybody, and it's rare in that sense. The financial crash was one thing. It affected a lot of businesses, especially in terms of borrowing and credit and things like that. The ability to access credit, which isn't so much of a problem right now. Actually, the government are doing their best to kind of shore up that people can access credit where they need it. But this is happening to everybody, and I think that there's this message about stay at home, think socially responsibly, all that kind of stuff. One thing to consider is not to panic cancel your arrangements with other small businesses. Don't ask them for a refund if you can reschedule, things like that. If you ask every business that you've got work with for a refund, then none of them are going to be here when this finishes. And if everyone did that to you, you wouldn't be here either. So I think we have, where we can afford it, obviously not everybody is affected in the same way by this, and those that are really adversely affected need to take precautions to make sure that they have cash available. But where we can afford to, we have a responsibility to support other businesses, especially where we know they're entrepreneurs who are part of our network and the small business community. We have a responsibility to keep our subscriptions. Really good example, I attend a small gym. they have had to close. I'm keeping my membership. I can afford to do that. I'm not going to cancel my membership just because I can't go for a few weeks. And in fact, what they're doing is they're pivoting and they're offering a lot of their courses online now. So that's an agility that people are kind of making use of. So that's an example of how we can, I think what this whole thing has shown us is there's a need to be more socially conscious in business and in our personal lives and in our health and in our communities. And this has shown us to kind of do that. The next step really then is to make use of the professionals around you to remain financially engaged in what you do. First up, talk to your accountant if you've got one. They are professionals, they are qualified, they've got years of experience, especially those of us who have been through ups and downs of the economy, ups and downs of business, changes in legislation for certain businesses. A lot of us have dealt with the fallout for a lot of businesses from a piece of legislation called IR35, which has changed the way that people work and has created financial insecurity for them. That's been put on the back burner for a year, if any of you are affected by IR35. So you've got a little bit of a reprieve in that. A lot of us have already been able to advise and really help businesses during times like this. And I think it's really important to engage those people, especially, again, if you've got them on a subscription. Contact them, email them, Skype them, Zoom them. They'll be really willing to help at this time. A lot of them are working from home, so the service you're seeing from them won't be any different. If anything, you might be getting more of a personalised service. And they're really going to be able to help you. Speak to your HR advisors, speak to anyone you've got who's helping with staffing, payroll, contracts. Use those services to kind of help you get through this. All of those people will be, or should be, really dialed into what's going on. And actually, if you don't have one of them engaged, there's a lot of free resource out there. We've been putting up tons of stuff about all this, about the legislative changes, and we're not the only ones. There's out there. Make sure it is reliable information. Somebody said to me that they seen they could claim something. I was like, brilliant, I'll include it, send me a link to it. And it was a link to someone's Facebook status. So don't follow that advice, but do look for your professional advisors and the people who you engage with, and reach out to the rest of the community. Ask them what they're doing. They can really help you during these times. The next thing to think about is what support there is available out there at the moment. So I'll just kind of really quickly rattle off some of the support that we know is out there. First off, sole traders, self-employed people, freelancers. I know a lot of us, like I said earlier, really lobbying hard to get more support. I am told there's going to be an announcement later this week. I'm keeping everything crossed that it goes the way we want it to in terms of that support. Businesses, you have probably already heard about the 80% staffing grant for furloughed employees. This is where you talk to your accountants, and this is where you talk to your HR advisors. The mechanism to access this grant isn't available yet. We're told it's going to be through a portal on the HMRC site. It doesn't exist yet, but bear with us. Every advisor out there, as soon as this thing is available, we're going to be on it. There's been some confusion around it. You don't have to top up the salaries to 100% of your staff wages. You can if you want to. If you can't afford to, obviously, because you've had to furlough your workers, then you can just pay them at 80%. And from what I can see, that will be reclaimed as a grant from HMRC. Keep them on the books, don't P45 anybody, and if you have laid people off already, engage with them again and offer to get them back on the payroll, because it will backdate to the 1st of March. So it applies to anybody who was on the payroll as at the end of February, so you'll have submitted their stuff via HMRC on the real-time information scheme, and anyone who's already on the payroll then will be included. Directors, you may well be on the payroll. However, as I mentioned earlier, the information out there about whether you'd be included as a furloughed employee is sketchy. We don't know. And this is because of the laws around directors. I touched on earlier, very often normal employment laws and things like that don't apply to directors. A lot of directors take a combination of salary and dividends in order to pay themselves. We don't know yet how it's going to look in terms of support for you, but again, there's a lot of people like myself out there who are putting information out. So just keep your eyes out for it. Self-employed people, currently, like I said, we're hoping for a better announcement. Currently, you can the limits and the caps on universal credit have been changed. Now, a lot of people kind of shy away from this, say they're not going to be able to claim enough. A lot of people said it's not fair, we're only getting £94 a week SSP. That's not necessarily the case, and it is worth looking into if you can't hang on another week or so. In some cases, support can be, we've seen things up to about £1,500 worth per month. It's not tons, you might be earning a lot more than that through your self-employment, but it's something. And we're getting close there to that £2,500 a month max for the equivalent of the employee furloughed worker grant. So it really is worth looking at, especially if you're struggling at the moment. Okay, so the next thing to think about then is that this financially is that this period of time has very much changed the way that a lot of us work, and has kind of forced a lot more of us into being creative, into pivoting our businesses, working from home, creating new products and services for people. So it's something to look at for the future, and it's a scheme that already exists, and in the budget they announced that the reclaimable rate of allowance on it has gone up by 1%, which is good news. Is the R&D tax credit scheme. There's a lot of advisors out there who do it. There's a lot that do it on a kind of a percentage of what's claimed back. Shop around. There's so many of them, just have a good old shop around for it. But that's really something to think about, because in this time of change, where many of the small business community have used innovation to plug the gaps in their cash flow, they've innovated, you've done research and development, you've created a new product or service, you may well find that actually what you've done is falling into the lines of R&D tax credits. Now, what that does in the majority of cases is significantly reduces future tax bills. So that could be a really good way of mitigating if you're concerned you've got to month 9 of the year and there's, even with a downturn in your income, you're going to be potentially looking at a hefty tax bill at the end of this, and that cash flow is looking scary. R&D tax credits are a legitimate and endorsed way of claiming credit for that innovation and that research and that development work that you're doing. So that is something to really look into, which will, hopefully a lot of you are saving money every month into a tax savings account. If you're doing that, that could free up that cash for you. So get engaged and look at that right now. And now's the time really to get your bookkeeping up to date. No one likes doing it. Get your accountant to do it. Get your bookkeeper to do it. If you need something to do, do it yourself. It's a really easy way of getting yourself engaged, getting yourself up to date. A lot of the support out there is going to require you to have up-to-date financials. So if you look at the business interruption loan scheme that was announced by government, they've now said that that is going to be demand-led. So there's no upper cap on how much is going to be allowed to be borrowed through this scheme. It's not easy money. It is still a loan. You will still have to pay it back, and there are going to be conditions around how that happens. The criteria of the lending falls to banks and lenders, and currently there are only about 40 who are on the approved scheme. You can check the British Business Bank website for who's on there. We've spoken to a few banks, and most of them have quite similar criteria. They're going to want financials. They're going to want your latest sets of accounts, your latest management accounts, and they'll probably want a 1-year cash flow forecast. And this is why getting financially engaged is really important. If you're going to access any of the grants or any of the support, you've got to have those numbers there, because it will speed it up. If someone says to you, can you send me over your management accounts, and you've got them, great. You haven't then got to go to somebody else and get the management accounts and get them scheduled in. You can get straight on the case and just send that information right over. They will want cash flow forecasts. The tricky bit around the business interruption loan scheme is that your business still has to be viable. So if your business was already on a downward trend before this happened, and this has just tipped it over the edge, I don't know how open a lending facility would be to you under that scheme, and it might not be the right one for you. The other tricky part to this is there are going to be some limitations on how much you can borrow. So all borrowing, ultimately, you're still responsible for it. So whilst the government has said that it will back 80% of it and give a guarantee for 80% of that, that guarantee exists between the lender and the government, not you. And that lender will still go after you for the money if you can't pay it back. It's only when they've exhausted you as a source of any repayment will they then call on that government backing. So it's not easy cash, it's not free cash, and eventually interest payments will start on it. In order to access it, like I said, you're going to need financials, and there's going to be limitations on how much you can borrow based on those financials. I've seen figures like lending no more than 25% of the previous year's turnover. This is supposed to be a gap plugging exercise. So this is where you've suffered, exactly as it says, interruption into your cash flow, into the business, your incomes into the business because of coronavirus. So it isn't a loan to buy new machinery. It's not an asset purchase scheme. This is a loan to, it's working capital. And so because of that, you're going to have to be able to prove that once it's all over, whenever that might be, that business is going to return to normal and that gap will be plugged, and therefore you can make your repayments. So that's going to be trickier. The business, I've just seen a question pop up. The business interruption loan scheme is already available. That went live on Monday. So you can already, if it does look like it's something that you want to access, you can access that already. And first stop, talk to your bank, look at the British Business Bank website, and see what information is on there and where you can access that funding. It is already available. But just to it sounded great in the budget, it sounded amazing, this brilliant thing. It's still a loan, you're still going to have to repay it. You should approach that loan with the same caution you would approach any borrowing. This is not free money. Okay. The next thing in terms of being financially engaged, I think that is something that hasn't been spoken about a lot, is that if you have staff, is to talk to them about your company, what it does, your income, your revenues, how you're paying their salaries over the next few months. We've had some very candid conversations with our staff. We've engaged them. I think when this all when we first started moving people to home working, we first started doing that about 3 weeks ago. For some people, if people have never worked from home before, it's quite a novelty, dog in a picture, and it's still lovely to have that. But I think maybe that shelters people from the fact that for a lot of businesses, this is really serious. You quote it to if one of your staff lost their salary for a month, they'd really struggle. Well, if a business loses its salary for a month, it's going to really struggle. So I think having really candid conversations about that with people is a very good idea. You don't have to scare them, you don't have to scaremonger, but I think that it's a really good opportunity for your staff and key workers to become engaged in the business. There's a lot of talk in business. A lot of us talk about our culture, about how we communicate with our staff. If you ever needed to do that, now is the time to really do that. Like I said, it hasn't got to be scary. You don't have to terrify people with, the ship sinking, help. This is a case of, you need to be better for our customers than you've ever been. This is, we might have to adjust. We will have to pull in the same direction. But ultimately, it's a really good opportunity to create that team culture and to get people to understand the overall makeup of the company. Now, I employ a bunch of accountants and they know how to do accounts. But yet, when you work for somebody else, there is always that gap between their understanding of the business and your understanding of the business as a business owner. And often that gap's not a bad thing. You can't tell everybody everything all the time. You'd have complete overwhelm. But right now, I think sharing a little bit more information with your key workers and your staff, expressing a little bit of vulnerability, letting them see that you're fighting their corner, you're fighting for their jobs, you're fighting to keep going. I think that's going to be really important at this time. And I suppose I've kind of really rattled through this. I've gone quite quickly on here. Is the opportunity? Here's a really good opportunity to plan. is to, a lot of us have kind of, our working days changed, and what we do on a day-to-day basis has massively shifted. And so if we're going to have a shift, now is the time to make understanding your finances more of a part of your day-to-day. A lot of business owners don't like the finance side of things because it's scary. And historically, the finance side of things, for a lot of us, hasn't always been great news. You know, we talk to accountants and we talk to business advisors and we talk to our banks and we raise equity. And all of those are hurdles, all of those are barriers to overcome, and all of those are hard work. So even myself, with a financial background, I quite often defer to my business partner because I don't deal with the finances. And as long as she's not freaking out, I'm quite happy that everything's fine. And it's even made me realise, do you know what? Now's the time to really be a bit more engaged in this. And that can be quite a shift for everybody. But given that everything else has already shifted, why not? You take this opportunity to build a little bit of financial engagement into your everyday. Understand what your key revenue drivers are. Nothing's going to sort the wheat from the chaff, like this sort of thing. Understand who your best employees are, who needs upskilling. Understand who your best suppliers are. You can look at your supply chain now, and the ones that are helping you and the ones that are being lenient and shifting with you, they're the ones you want to be keeping a relationship going forward. It's a really good opportunity to kind of pivot, shift and plan. And if you're getting into your finances and you're getting your current stuff up to date, now is a really good opportunity to, like I said, make that a habit and to keep kind of forward planning. We have a tendency to do a plan and then 3 weeks later it's out of date. Anyone who's ever done a pitch deck or a business plan for anybody knows that you write it and then it disappears. If you're good, you keep that thing up to date. And we all say stuff like it's a working document, and I'm just as guilty as anybody. I go, oh yeah, it's a working document, and I don't look at it again until 4 months later. I'm like, oh, we haven't done any of that, or we did more than that. Now is actually that time to have working documents and to get. You don't want to micromanage. You don't want to be too focused on the detail, but if you want, now is a better time than any to really focus on the detail of what goes in and out. And I think it's really going to set people up. The positive from this is becoming more financially engaged now. It's really going to set you up for the future, because you're just going to have, when I always think gut instinct is based on that kind of innate knowledge of your business. So when opportunities come through the door, if you spent this time to become really engaged with your figures, and those opportunities come through the door, you're very quickly going to have that innate instinct and knowledge of whether it's going to work for you or not, because you had this time to really get into the minutiae of it and understand it. So that's kind of a positive to take from that, I think. And in terms of cash flow and needing to access things, make sure that, like I said, cash is king through this whole thing. The VAT payments for this quarter are deferred. If you can't afford for your direct debit to come out of your bank account for your VAT or self-assessment, cancel your direct debit with HMRC. These systems, especially in government, take a long time to shift. Cancel that direct debit just so it doesn't accidentally come out of your bank account. Make use of any extension there is there. A lot of loan facilities offering payment holidays and payment breaks that won't affect your credit rating. As a business owner, your finances from your business are probably quite intrinsically linked to your finances personally. Make use of the stuff that is available to you personally as well. So if most mortgage companies now are offering a 3-month mortgage break without it affecting your credit rating, make use of that. You take that, because that mortgage is one of your biggest outgoings. Take that gap. We should be going to, we're looking for savings in cash. Go big first. Go mortgages. Go bank. Go government. Don't go small business community and cancelling small direct debits first. That's not the first place to go. The first place is the big guys have got help out there. Try and access that first, because they've got the broad shoulders to take it. And that's it, really. I think that this is a really rough time for business, and it's unique because it's happening to everybody all at the same time. So typically where everyone got locked down, typically where one business fails, another one thrives, and vice versa, and markets shift and technology changes and the incumbents get pushed out by the challengers and all that kind of stuff. But suddenly, regardless of whether you're a startup or established or an incumbent or a challenger or a disruptor, suddenly everything went on stop and we all had to shift in less than a month. 1 month ago, the world did not look like this. You know, you haven't even got a new set of management accounts out and the world has completely changed. So don't beat yourself up for feeling a bit baffled by it. I'm baffled by it daily. I'm having to shift and change, as is everybody else. But there is support out there. Take it. Keep talking to each other. And I suppose that the best positive that we can take out of this is to use this time to really understand the nitty gritty of the numbers in your business and to work with them so that you're in the best position possible to take any help, support, and opportunities that are out there. That's kind of it for me, really. I rattle through that. I talk really quickly, so I'm very happy to take some questions now if people want to ask.
Okay, brilliant. Thank you very much, Lucy. So that was really interesting and some fantastic advice in there. So as you saw, we've had a couple of questions through, but I just want to ask something to begin with. So you mentioned at the start of the talk and a couple of times throughout actually about the support for self-employed workers. Last week, Stephen Barclay said it was operationally difficult to organise support for self-employed workers. It's something that Rishi Sunak repeated in Parliament yesterday. And for those who don't know, Lucy was part of a group of fintech entrepreneurs that developed a concept over the weekend in 48 hours, I think it was, Lucy.
It was a hell of a weekend.
Yeah, to prove that it was possible and relatively simple for freelancers and self-employed workers to prove their loss of earnings. Could you just tell us a bit more about that concept and that platform, Lucy?
Yeah, sure. So, as Jonathan said, the argument we're getting back from the government as to why they've not been able to put a package for self-employed and freelancers in the same way they've been able to for employees is that it's too difficult. It's not. It really isn't. Basically, it's to do with the way that income is assessed for self-employed people and freelancers. Predominantly, it's via the self-assessment system. And so people who are on self-assessment will submit their tax return once a year to HMRC. Now, they already have all that data. That data, if you've submitted a tax return, they've got details of your income. We know that because they send everyone tax demands twice a year. So that data for a large proportion of those 4.9 million people already exists. We're also almost at the end of the tax year. So one of the kind of proposals I put forward was, well, why not just kind of open the gateway for filing early and let people get their tax returns for year ended 5th of April in now, and then you've got years worth of income, which would cover anybody who hasn't filed yet. So basically everybody pretty much, apart from a very small minority, would be up to date. So what we looked at in this project is we've obviously got open banking now, and the ability to very quickly pull from open banking the income from people's bank accounts, and for a freelancer or a self-employed person to use that as a verification tool to produce a self-certification for government or HMRC to certify their income, and to also be able to certify loss of income. You know, if you're freelance or you run a small cake shop and you've had to be closed down, it's going to be really clear from your bank account that no income's come in this week because the shop was shut. So that's really easy to do. So I say really easy, I'm not a coder. It looked really easy when the coders did it. But so what we did, we got a group of fintech people together and we built this system called COVID credit. It was a self-certification system to allow people to self-certify. It's still in testing, it's still in concept stage, but what we wanted to do was to produce something that we could show government, actually, you said it's too complicated, it's too difficult, we can't do this. And our answer as the small business and as the fintech community is that it's not too difficult, and just because something is difficult doesn't mean you can abandon 4.9 million people. There are solutions out here, and look, there was a group of us who managed to pull together something in 48 hours. If our small group of people can do it over a weekend, I'm pretty certain government has the resource to do it. So we're pushing hard. We've got a lot of groups lobbying. There's a lot of conversations happening with the Treasury, Number 10. There's all kinds of people. You might have seen a bit of press around it. It's been in Forbes and TechCrunch. So we're trying really hard to prove that this can be done. and it can be done quickly and efficiently if we use technology and collaboration to get this sorted for people. I don't think it's a good enough excuse to just go, oh well, it's complex, so stick with the universal credits. It's not good enough for me. I don't think that's acceptable.
Okay, excellent, and I'm sure I speak for all of the self-employed workers who are on this webinar when they kind of thank you for your efforts on that. And now our next question comes from Mac, who asks if you think that this whole situation will kind of make more businesses become more conservative in their approach in the future, taking fewer risks, holding on to more capital, as you said, cash is king, and kind of taking that forward.
Yeah, I think actually what's going to happen is we're going to get a split both ways. So it's going to be, you're either going to get people who kind of really felt the pinch here and become very cautious as a result, and who go, right, I'm going to conserve the pennies. I'm not going to sign up for anything I don't need. And we saw that happen in after the financial crisis. Myself and my business partner, our business was 2 years old when that happened, and we learned to run a business really lean. And actually that is something that we've carried on in our business ever since. We don't tend to have unnecessary expenses. So there's going to be that. And I think it potentially could affect investment. So I think investors looking at businesses and equity in the future are going to look at, right, if a disaster happens, is this a service? Is this a business that is essential? Is it going to keep going in the event of something like this happening again? That is going to be a question they ask, depending on how long they want that investment to be in there. I then think you're going to get the other side of the coin, where you get people who are maybe a slightly more cavalier approach and will be, well, the world could end at any moment, I may as well just go for it. So you're also going to get those sorts of people rising from the ashes as well. And then that's an attitude you see a lot in the entrepreneurial community. A lot of big business people have gone bankrupt several times, or have gone down in flames and risen from the ashes. It's not an unusual story. I wouldn't recommend it. Pretty stressful, but it can happen. So I think you're going to get a bit of both out there. It's definitely going to be interesting. I'm curious to see what the world is going to look like once we come out the other side of this.
Okay, brilliant. The next question is from Gary, who, focusing on pre-revenue startups, asks if it could be an option for those that are currently working with HMRC via their SEIS and EIS program, could be offered a convertible note for their government funding support.
Oh, I don't actually know. So does he mean from a loan from government?
I'm not entirely sure, so I'll read word for word. Do you think an option from government for pre-revenue startups who are currently working with HMRC via their SEIS EIS program could be offered a convertible note for their government funding support? I guess what we could do is we could ask Gary, if you're still with us, if you just want to clarify that in the chat, and we'll come back to it. Yeah, so Gary, if you could do that, and we'll move on to the next question from Helene, who asks if there is any specific grant or support from the government for travel businesses. So their business, Big Blue Adventures, is a small adventure travel company which runs trips in Wales and Portugal. It doesn't own any property and doesn't pay business rates, and they're just looking to find out if there's any other support other than loans, which they don't really want to take unless absolutely necessary.
Yeah, so this, depending on whether you're in England, Wales or Scotland, there are local grants available. So they're, off the top of my head, on our, I'm not plugging us so much, but we are keeping one of the pages on our website up to date with all the support. Maybe if you felt it was appropriate, you could share that later. I can pop it on Twitter or something. But and there are pages out there from other companies who are keeping it up to date. There are grants around for non-shop based and non-retail based businesses, but those are devolved. So I think you probably have to look at what your local authority is offering in terms of that. And the main one, though, for business interruption is that business interruption loan scheme. The maximum grants that I've seen available are up to £25,000. So whether that's the kind of size you're looking for, I'm not entirely sure. there's not a ton of there's help out there, but let's just say there's not a lot of free money going around. You be wary when you look at these things.
Okay, and just while we're waiting for Gary to come back on his question, just another one from me, Lucy. Do you think that there's any danger of businesses taking advantage of the 80% wage scheme at all? I'm just thinking off the top of my head, some that might think, oh, bit of free money, I could say that my staff are furloughed, get the 80%, and if they want to top it up or not, but keep their staff working. Is there any danger of that happening?
Yes. In a nutshell, any time that you get governments offering support, there is always a danger of somebody looking to take advantage of it. Unfortunately, because it ruins it for the rest of us, and that's why we can't have nice stuff. There is a danger of that, and I don't know what the checking mechanisms are going to be yet, and I don't know how they're going to enforce it. That's not a carte blanche to go to do it, by the way. Like I said earlier, the portal, which we understand is going to be the way that you claim things, that's not live yet. We've not had eyes on it. I don't know what it looks like. I don't know what verification they're going to be asking for. However, if I was HMRC, this is what I would be doing. First off, we already know that staff who are furloughed will have to be told that they're furloughed. So, what is the tolerance for a member of staff who's being told, you're furloughed, so I'm going to be claiming a grant for you, but by the way, wink, wink, you're not really, I'm not going to top it up, but I expect you to work, just cut a day down a week. I don't think most employers would tolerate that. And because you have to, strictly speaking, write to that member of staff to tell them they're a furloughed worker, they're going to know that. It's also, you can't just stick people on the payroll now for it. It has to be for people who were on payroll at the end of February. So you would have already submitted the real-time information report to HMRC for that. If I was HMRC, I would also be generating letters to employees to say that you have been listed by your employer as a furloughed worker, which should discourage any nefarious use of the system for people, claiming the grant and then not really furloughing the workers. But like with everything, there is a risk that somebody's going to abuse the system and it will ruin it for the rest of us. So if you were thinking of it, please don't, because they won't give us nice things again if this happens. So please be good.
There's a great response to that. So Gary has come back, and what I'll do is I'll read his initial question, right, and then I'll read his clarification. So the initial question was, do you feel an option from government for pre-revenue startups who are currently working with HMRC via their EIS and SEIS programs could be offered a convertible note for their government funding support? And then, so his clarification is a convertible note would effectively allow pre-revenue companies runway funding to which the startup post-COVID-19 could either then pay back the convertible note or convert it to equity ownership.
So I would assume if that note's coming from the government, you're looking for a bit like a bank bailout, the note to be converted to government ownership of the company. Currently, I've not seen anything like that. I haven't. The loan scheme that exists is for business interruption. Now, by the very nature of you being pre-trade, your business revenues haven't been interrupted because you don't have any revenues yet. So I don't think that would be applicable. I also, having seen some of the lenders and their criteria for what they will lend, there've been figures like no more than 25% of the previous year's revenue. Well, if your previous year's revenue was 0, 25% of 0 is 0. So I don't know whether that loan is going to be applicable. I haven't seen any additional support for pre-starts up there. I've not seen any additional kind of options for loan note or SEIS or EIS scheme additional grants. I don't know. I've not heard anything about it being something the government's even looking at. So it might be that doesn't exist. If I hear any different, then I will. I'll tweet it out there for you.
Okay, brilliant. And then just one final one before we go. Helene has just followed up and thanked you for your answer. And she's just asking if you would recommend the interruption loan scheme over a bigger overdraft, just because both incur costs and interest fees. Is one better than the other?
This very much depends on. So they both incur fees. They both you'll probably have to guarantee both of them as a director. I think I saw that loans up to about 100 grand PGs from directors, just like overdrafts are. Up to about 250 grand is probably a debenture, and over that is potentially offering security. So that's kind of what I've seen around there. So on the loan, again, depending on how much you're looking at borrowing, I think some banks are saying a minimum of 25,000 in terms of borrowing, because that's where kind of grants stop and business loan interruption, the grants I mentioned earlier, they stop potentially, and interruption loan scheme starts. So you know, depending on very much how much you're looking at borrowing. If you're not looking at borrowing an awful lot of money, business overdrafts are, you have arrangement fees, but they're easy to pay back. If you've got the cash there, you don't have to make arrangements to pay things back. It just obviously just goes into your bank account to bring down that balance. And I think now's a really good time to negotiate with your bank about their overdraft terms. If you've got a business bank manager, you can discuss your banking fees with them. It's really unfortunate timing on a kind of personal banking note. Really unfortunate timing that a lot of the banks come April have changed their overdraft policies to, and this is something for everyone to watch out for, because it's kind of snuck through and noticed for a lot of people. Bank overdrafts for personal accounts, a lot of banks are changing their unauthorized overdraft interest limits to nearing 40%. They are the new danger borrowing for personal accounts. So check with your bank. It's really unfortunate timing. That legislation, that change has been on the cards for a while, and people haven't noticed it. And now this has come out, and they suddenly realised. I think there's been a bit of tabloid press about it, but it's been on the cards for a while. It's bad timing. So they are danger borrowing personally. Not so much the case for business, because you have a relationship with your bank manager more often there. What I would say is an overdraft is probably easier to get. So if you need cash quickly, an overdraft is probably easier to arrange. You can probably just ring your bank manager or email them even and ask for an overdraft, and they can probably get it through quite quickly. They also probably won't be asking for financial forecasts and cash flows and things like that. Whereas on the interruption loan scheme, you're potentially going to have to provide a lot more information from what I've seen. So I guess to summarise, my answer would be, depends how much you're looking at borrowing and what it's for. If it's really plugging a quick gap and you can pay it back quickly afterwards, I might go overdraft. If it's more of a potentially long-term gap and you don't mind the idea of that loan on the balance sheet, then I go with a loan.
Okay, brilliant. I think that's it, and yeah, that's all we've got time for. So, Lucy, thank you so much for taking the time out of your day to do this with us. I can imagine how busy you are at the moment. So, if you want to follow Lucy for any more advice or information, she's pretty active on Twitter at Lucy Mazuma. If there's anything you'd like to catch up on with today's webinar, we'll be sending out a recording in the next few days. And our next webinar in the Business COVID-19 series takes place this coming Monday. That's the 31st of March. And we'll be joined by Will King, who is the founder of King of Shaves. And he'll be talking to us about the importance of understanding and acknowledging what problems your business faces in a crisis such as this. So I hope to see you there. But for now, thanks for joining us today, and goodbye.